Welcome to the Silent Trading channel. Today, I'll be analyzing the gold chart on Monday the 2nd of February to see whether the chart has created a reversal or has it complete its dump and pump, right? Because as you can see, previously the gold has a pump, a really hot pump on the chart, on the market, because it went up all the way to create an all-time high of about 5598, about something like this, but not touching the 5600 resistance before it start pulling back, right? A whole candle pullback, a full candle pullback, and then went to push down to create a bottom wick before pulling back again, and was able to close, was able to produce a what? A bearish price action, which is a reversal over here. This reversal over here signifies a bearish reversal, right? A bearish price action, a successful bearish price action, but not a complete one yet, right? A complete one is when the next candle are able to push down and do what? And then touch support and also close below support, which means the next candle would have to break support before this reversal is a complete one, right? But the problem is the candle today, right? The Monday candle, or the first candle of the week, went and opened and then dumped down all the way here to create a new low of what? A new low of about 4,400, but wasn't able to touch 4,400, right? But wasn't able to touch support at 4,400, which is what? Now you see, the price went to create a new low at 4,402, right? About 200 pips from the 4,400 support, which means support isn't touched yet, right? Support isn't touched, which means buy limits isn't triggered yet. So when buy limits aren't triggered yet, price start pulling back, which means we know that price on the market has dumped down far enough to clear off buyers, right? To clear off buyers from buying from all the way up, correct? Clear off buyers from buying all the way up and then pushing down to clear off buyers. And then after the chart has cleared off buyers, right? And then when the price pushed down too low, buyers from above, right, gets pressured or get forced into opening what? Opening sell position to hedge their buy position at above, right? Because they are deep into drawdown and they are not able to manage their portfolio any further. So all they can do is, when price push down too much, they can start opening sell position to hedge their buy position above, which means they're locking their losses, right? Preventing their portfolio from getting liquidated, correct? But the problem is, the moment they start selling below here, they leave at this bottom wick below and the price start pulling back, which means if price push up, for those people to start closing their buy position, which is open at the worst possible price, they are not able to solve the sell position below here, right? Which means now the chart has do one thing that it has always do in the same way, in a repeatable way, and it has always repeat the same sequence and pattern. The market always leave buyers above and sellers below, which means when the price drop down too much for the buyers to hold on to their position, too much for the buyers to manage their portfolio or solve their drawdown, all they could do is opening a sell position to hedge their buy position, which means right now retail traders right now retains buy position above and sell position below, which means the market right now is pressuring them into closing all of their position either above or below. If most of the traders believing the price is going to go up and they start closing their sell position and holding on to their buy position, the chart is gonna drop down further. Because why? When most of the time people are holding on to their buy position, the price is gonna dump on them. Or when most of the time people are holding sell position, the price is gonna pump on them, right? It is either a pump or dump, correct? So if sellers are holding on to the position, the price is gonna pump and pump and pump, right? The price is only gonna expand above, right? But if people are holding on to the buy position, the price is gonna expand below and below and below, which means the more people are holding on to their buy position or their long position, the more price is gonna reverse and then break support and break support and break support. Only after people start to enter a short position or enter a sell position, only then will the market start reversing and push to the upside and then expand upwards again and again. Which means we know that the price is always tricking people into entering position they are not meant to enter, right? So if the price is going to go up, it needs to trick people into entering sell position. It needs to trick people into entering short position. Because why? If there are no money, if there are no capital deposit into the market, who is going to profit from this, right? If nobody is going to lose their money in the market, there will be nobody profiting from the market. Which means if price is going to go up, there will have to be people selling on the market. If price is going to go down, there would have to be people buying on the market before the manipulators, before the institution, before the smart money can push the price down, right? Because like I said, those institutions, those smart money, they are not looking out to clear off your money. They are not looking out to take your money, but they're only doing everything according to what the market is doing. Because this is a money game, this is a zero-sum game. There has to be people losing and winning, right? There must be losers for there to be winners. If there are nobody losing, there can be nobody winning, right? There has to be someone paying the table. There has to be someone throwing their chips on the table before anyone can profit from the chips, right? So if no one is losing, no one can be winning. Yeah. So right now, as we can see, the weekly candle has pushed down all the way down, but wasn't able to touch the support at 4,400 and then start pulling back. And we see another support at where? At here. This is a reversal, which is what I call the foundation and the base of the weekly time frame, right? Because price needs to create a base at every now or then, because there can only be price going up only when they're balanced in the market. Price can't go up again and again and again and not coming back. There will always be a time where price needs to come back to retrace and clear off a imbalance, because for price to go up further, imbalance should be cleared, orders should be filled, right? When there are too much volumes on the market at one time and that causes the price to go up and go up too much, there will still be a time when price has to come back down to clear off all this imbalance before price can start expanding upwards again. Which means right now it is either the price is going to complete this reversal, or the price is going to start pushing up and then touching this resistance over here, right? Touching this resistance meaning the price is going to start triggering sell limits. And if the price is going to start triggering sell limits, which means we know that the market is starting to accumulate sellers, right? When the market start accumulating sellers, which means we also know that the price is going to start going up and up and up. That is how we know the price is moving, where or when, and how the price is going to move. But we do not know in advance that the price is going to push up or push down. We only know that when price start accumulating sellers at support, at resistance, the price is going to start pushing up and up. Or if price is going to start accumulating buyers at support, the price is going to start pushing down and down. Which means all we need to wait for is price action, right? But for my sense, I wait for bar action, because my version of bar action and the price action is different. Because price action is when you wait for the candle to close and you see whether the candle has create a reversal, or you'll see whether a candle has a full body candle close, or the candle has pushed down and then pull back, or push up and then pull back. That is a price action. But for me, I'm looking at bar action, which means I'm looking at each and every candle that is still moving. That is bar action. On how it is moving, on its narrative, on what it is showing me by moving down to touch support, by moving down to touch support and then clear, or by moving down to touch support and then down below, right? Or it is going to sideways down, right? Slowly going to touch support one by one, until it has accumulated enough buyers before it starts dumping on the market. Because every bar action or every single candle tells me something I need to know about the market before I enter a position, right? Because if the market is not telling me anything, I'm not going to enter any position because that will be too risky, right? So now I'm going to look at the daily time frame. The daily candle has already pushed down, create a sharp wick below before pulling back, which means this candle over here, if I want the candle to start pushing up or creating a reversal over here, right? A reversal has to create over here by the daily candle has to pull back, a full pullback, and then push up to touch this resistance, because touching resistance means accumulating what? Sellers, right? And if the chart start accumulating sellers, which means price is going to start going further and further. But if not, and the price only start to push up, create a top wick, and then start pulling back and pushing down again, which means the market is telling us that the price is going to start sideways down in a strong position, in a strong way. But we are only looking at each and every candle that is showing us what a candle is doing. So right now the daily candle hasn't shown us anything, right? A reversal isn't created yet. A candle close, a body candle close, not yet, right? So we'll look at a 4-hour time frame. Now the 4-hour time frame, we see that the 4-hour time frame has created a reversal, right? A bullish reversal over here, and then price went up to touch what? Touch resistance, which means the 4-hour candle has already pushed up to touch resistance, which means accumulating sellers, right? Triggering sell limits. And after triggering sell limits, the next candle, as you can see, push up to clear off sellers from this resistance over here, right? You see, when price triggered sell limits or start accumulating sellers or sell volumes from the market, the price has to break above to clear off sellers, because sellers needs to go into drawdown to be forced to close their position before the price can start to pull back and push down again. Which means right now sellers are being pressured or forced into closing their position before the price can start pulling back to create a bottom wick. And when the price starts to create a bottom wick but create a bottom wick but not pushing all the way down to touch support, I'm gonna be buying at this wick over here, or at least this wick over here. Which means if I'm buying and the price start pushing down, create a bottom wick, and then pulling back again, and then start pushing up to touch this resistance over here, to touch this resistance over here, I know that my position over here is safe. This is how I play, by using retracement, by using price action, and by using also bar action. Bar action, which means I look at the candle that is still moving, about what is it doing. If I know it is only gonna start accumulating sellers, which means price is gonna start going up, if the candle then drop down to clear off buyers, that is where I'm buying, because buyers are clear off the market. When buyers are clear off the market, I'm gonna start buying, because if price is gonna push up and touch resistance again, sellers are gonna start selling more and more and more, and then price is gonna start expanding upwards more and more. That is how I'm trading on the market. I am only waiting for confirmation and price action before I start trading. I'm never gonna trade anything that is too risky. If the chart hasn't tell me anything, I'm not gonna enter any trade, right? You need to be patient to be able to trade consistently. You need to be patient to be able to be profitable consistently. That is how you're gonna do it, right? For today, that's all I'm gonna be saying today, because my time is running out, and I'm gonna be coming back tomorrow to analyze the chart for you guys to stay tuned to, and for you guys to watch and learn from what I'm doing, and then I'll be guiding you guys all the way from now on. I'm really sorry if I'm absent for the past few days. So for now, I'll see ya.